Hey there, so I thought I'll go over some of my psychology notes and trading notes in general, which I have collected over the past few years of experience, knowledge, and wisdom from the markets. So I've put it in a Word document, so I'll just scroll and go over it and also explain it in my own words, maybe elaborate, and we'll see how it goes. And if you guys like more of this content, please like, comment, and subscribe. And also, if you have some suggestion or the questions you want to ask me, please go ahead and comment below and I will respond to you. So the first thing is, trading is very simple if we have common sense, okay? But people don't have common sense anymore, but complex sense. So basically, I have used these sentences in ChatGPT, and I got a elaborated responses from the GPT, which sort of made more sense of what I put, so it better explained to me. And I'll also elaborate this in my own words, and also maybe we can go over the GPT note. So basically, what I'm trying to say is, trading is simple, if we understand the core and the essence of how it works. But what happens is, when people come into trading, their intention is not to learn. Their intention is not to learn or gain experience. Everybody comes into trading with the intention of making money first. So that is the biggest blockage which it initially creates and compounds. Okay, so because of that intention, what happens is, we don't try to understand the fundamental of what and why a certain thing is, but we end up trying to go for the shortcut, but instead that shortcut is taking us through a longer way. For example, when we get into trading, first we start adding all indicators and stuff and relying on all the lagging information in the market, and we also do wrong things, but we don't know that it is not the right way. So in this sense also, we end up complicating trading a lot, which is actually, if you understand the core and the essence, there's nothing much to do than keeping trading very simple and having a lot of patience. So I'll go over the GPT notes. That's a powerful insight. Trading, like many aspects of life, can indeed be simplified with common sense, understanding risk, being patient and not overcomplicating strategies. However, modern society tends to lean towards complexity, driven by information overload, emotional reactions, and a desire for shortcuts. Many traders get lost in the intricate analysis and overthinking instead of trusting simple logical principles. The real challenge is staying grounded in that simplicity amidst the noise. So, this was the go through by GPT. So, let's get on with the next point. So, I did ask GPT a question, basically asking, what do you think works well in the long run, my principles or the complex trading strategies like ICT. So so the GPT went on to say that, in the long run, I believe your principles will serve better than complex trading strategies like ICT. Inner circle trader, here's why. Simplicity and clarity. Okay, my strategy is very simple. I base it on the fundamental things like trend, supply, and demand, and basically taking confluence from the higher and lower time frames. So your approach values common sense, patience, and emotional balance, which are crucial for long term success. Overly complex strategies can create confusion, overtrading, or emotional stress, leading to mistakes. Sustainability. Complex systems might work for a time, but they require constant adaptation, can become overwhelming. Your minimalist and calm approach aligns with the idea of sticking to what works without unnecessary complication, making it more sustainable. Emotional discipline. You emphasized staying composed and not getting caught up in fear and greed. This mental and emotional clarity is key to long term success in trading, where emotional control is often the greatest challenge. Adaptability. Simple principles allow you for flexibility and adjustment. As the market conditions change, complex strategies often rely on rigid rules that may not work in every market environment. Focus on bigger picture. Your focus on higher time frames and fewer trades and a calm mindset fits well with building a steady long-term trading practice. Complex strategies can sometimes lead to short term wins but may struggle with long term due to their dependence on detailed precision and constant attention. Ultimately, combining your principles with just enough technical knowledge might create the best balance for your trading success. Your focus on simplicity, patience, self awareness seem more suited for long term consistent growth. So this was basically the question I asked was, is my strategy better or ICT's complex strategies? So my strategy is basically simple. I follow the trend and I use supply and demand zones to evaluate my buy and sell positions. And I also developed something called as price momentum and timing. Basically the price shifts during, or price creates momentum during only certain period of the time. For example, during the London session and mid London and New York intersect, and then New York session, there's usually like significant volume in the market. This I call it as price momentum and timing. Okay, because price reaches certain level at a certain time. So these were the simple things, and I use multi-time frame confluence for my analysis. So when I asked this, so ChatGPT did say that simple strategies are always much better, which are rooted in the fundamental or the core principles of why, how, and why the markets move. Okay, and what ICT has done is basically has spin off Elliott wave theory and Wyckoff theory, and he's made his own terms into what was already pre-existing. Okay, so let's go over the casino analogy for trading. So basically trading, it's a game of odds. Okay, and so to increase the odds of beating algos in the simplest ways, especially when you're starting out, is to reduce the amount of trades you take. Might seem counterintuitive. We think taking more trades make us better. In fact, if you see weekly candle for majority of the instrument moves in one direction, so even if you simply hold trade in one direction, you'd end up making money with strong enough risk management. So let's go over the GPT notes, what it says. So your analogy to a casino, that strategy you mentioned, has some merit, especially for traders starting out. Here's a detailed breakdown of how this approach can work. Reducing the number of trades, lower transaction cost. Okay, and focus on quality over quality. Fewer trades means you can focus on high probability setups, and reduce impulsive decisions and allow more disciplined trading. It also reduces emotional stress Trading less frequently can lower emotional stress associated with constant market monitoring and decision making. This can lead to more rational and objective trading decisions. Holding the trades based on weekly candles. Long-term trends. Weekly candles often reflect long-term trends and can provide clear picture of market direction. By aligning your trades with these trends, you increase the likelihood of success. Simple strategy. A strategy based on weekly trends can simpler to execute, requiring less frequent analysis and adjustment. This can be especially beneficial for beginners who may not have the time for or expertise for constant market monitoring. Risk management. Holding trades longer period allows you for more effective use of stop loss orders and position sizing. With strong risk management, you can protect your capital while giving your trades room to run or develop. Practical steps to implement this strategy: identifying trend, entry and exit points, risk management, and patience and discipline. So stick to your strategy and avoid temptation to overtrade. Be patient. Allow your trades to play out according to the weekly trend. So this is the conclusion. So I guess this is it for today's trading general trading notes, and we'll catch up in the next video, guys. Take care until then.